Hey everyone, I'm Charting Man Dan with the Chart Guys. We're going to check in on the markets after a shortened holiday week. There's a lot of volatility coming in the near term, probably this coming week, with a lot of tightening ranges that we're going to be watching. For a break, we're going to talk about different sectors like uranium, quantum, Circle stealing the show. In terms of my attention, I'll talk a bit about how I trade those blue sky runners. Let's go. All right, so we'll start on weekly time frames and zoom in from there. We have the S&P 500 and the NASDAQ very flat and sideways, of course, still digesting all the headlines with the Iran situation, but pretty impressive that we're not consolidating on the weekly yet in any meaningful way. You know, you would think after going straight up for 7 weeks, we've been in a daily uptrend for 7-8 weeks, that, you know, that kind of headline would be able to lead to consolidation on the weekly fairly easily, but we're not there just yet. And so again, my mindset remains the same, where I am bullish until we lose the daily uptrend. And we came very close on the holiday. Futures got right down below it. But again, you know, this is a base of support. This is the most important level for me. Keeping in mind, if you adjust for the futures chart, adjust for the contract changes, it's a bit more of a clear uptrend still intact. So that little nuance depends on you as an individual. I'm going to stay unadjusted just so I get a little bit of an earlier heads up. Things are shifting. And then I'll probably zoom out to the, not zoom out, but flip over to the adjusted to keep an eye on it from there. But for now, we are still battling and chopping around sideways. And, you know, the big question into the start of this next week is, can the bulls confirm an inverse head and shoulders? And as far as the FOMC reaction, that was very minimal and not really an event. But the bulls need this 4-hour inverse head and shoulders to confirm if they're going to take over some momentum here. It's just a constant battle for 6,000 on the S&P 500 here. If you put that line right around 6,000, look at how much we've been back and forth with this level over the last, pretty much the last month. And it's been trying to hold as support most recently, but there's also very clear resistance levels as well. And so we're just battling. And this range is going to break with volatility. Here's the NASDAQ, again, daily, very similar. That's essentially a triple bottom. If you adjust, it's a more clear uptrend. Zoom out or zoom in to the 4-hour, looking for the attempt at a higher low after the big overnight bounce. But, you know, that's it. Just patiently waiting. And there's nothing wrong with being patient and waiting. I haven't really established any new swing positions because I'm waiting for some more clarity in the short term. While that's going on, I can look at individual names where I have way more clarity. We'll talk about Circle here at the end of the video because I'm going to go a bit more in depth. But, you know, Tesla, keeping a close eye on that. We'll talk about that in just a moment. But essentially, you know, the last 2 weeks, my trading has skewed back more towards day trading while I wait for more clarity on the longer term timeframes that are taking a while to chop around and develop. The semiconductor space. And again, keep in mind that let's just say we break bear, clear bear break on the daily. There's tons of space for weekly higher lows in the vast majority of everything that I watch. So semiconductors here, okay, let's say we fail resistance and roll over in the short term. We're just going to be looking for a weekly higher low with, again, tons of space for it to form. So we'll watch the retracement size. Is it a bull flag on the weekly? Do bears confirm the daily downtrend and follow through? That's all stuff we're going to be talking about down the line if something shifts here, but still patiently waiting. And we got semiconductors grinding sideways here. Again, look at all these tops at the 265. Pretty much 5 out of the last 7 days, we've topped out at 265. But what's going on during this semiconductor sideways is rotation. And we've been watching that rotation for a while now. There was a headline on Friday, and the NASDAQ saw a significant amount of weakness due to that headline. Look at this SMH volume. And honestly, I can't even remember. That just goes to show you, you know, how much that headline matters to me. China something chips. That's it. That's all I care about. You know, I see that volume. I go on Twitter. I confirm, yes, it is a headline we're reacting to. That reminds me, okay, that tells me things can get extreme on the 5-minute. Short-term RSI levels can get oversold. I want to be aware that this is a news reaction, but for me, as far as, you know, what's the implications of that news, the trend is all I care about on the daily, and so it's not a big deal if we're still in a daily uptrend. But you can see that dump. The NASDAQ got dragged down with it, and then we just ended the day sideways, tightening up with no real clarification as to whether the bulls can recover from that in that sideways range, or we're heading back down to test that low. But again, you know, you look at SMH, this is what it looks like, and you look at NVDA, and it's very similar. It's grinding. Again, it's a possible rising wedge. I don't like rising wedges in this market environment because a lot of them have broken bull. This was definitely a potential rising wedge back here. But look at the rotation. MU has just been on absolute fire. And it's been a higher low compared to the previous day, something like 13 of the last 14 days. And if you look at MU divided by SMH, you see that massive shift. This is the strongest that MU has been compared to SMH, the ETF, in the last 11 months. That is a very clear rotational shift going on. And so I'm watching for rotation in other places as well. I'm watching SMCI. This was a very nice sideways equilibrium, tightening up. We broke bull on Wednesday, and it wasn't very convincing because of the upper wick by the end of the day. You know, you draw this resistance zone where we topped out 1, 2, 3, 4, a bunch of times, more than that. But we got over it, couldn't close over it, but now we are over it and holding it on the back test. So again, if the bulls can recover from that headline on Friday, this coming week, I'm watching for SMCI to try and break this weekly bullish and get over 47.80 and see its shift underway as well. And if we go to SMCI divided by SMH, you can see that it's not really doing much, but watching, can that shift take place? And that's, you know, when you have lead bull sectors, that's the name of the game, just in terms of looking at, you know, the leader does its thing. It happens in crypto. Bitcoin does its thing. Then it heads out to the altcoins, or you see, you know, if Tesla is on fire, you'll see some of the smaller EV names get a little bit of tailwind behind them. And so it's definitely worth paying attention to when there is a leader. You keep an eye on the laggards for that rotation. And ideally, when that rotation is taking place, you want the leader to be trading sideways. Because generally, if the leader is pulling back in any meaningful way, it is going to weigh on the other names as well. But if it's trading sideways, it's almost like a stabilizing thing that just lets the other names then catch up a little bit. So definitely something to keep an eye on. And again, when SMH breaks the daily uptrend, we will absolutely be looking for a weekly higher low, but not yet. Higher low every single week for the last 2 months. That's impressive. That doesn't happen very often. It definitely has happened, but anyways, on to Tesla. Volatility is coming to Tesla. The bulls are trying for a weekly higher low. Inside bar, inside bar. Daily, you can see how tight we are. I've just been watching this 4-hour equilibrium, and that has helped me. You know, again, I've been talking with Chart Guys members about my second edge. My first edge is trading backburners. We'll talk about that in Circle. My second edge is recognizing equilibriums and trading them. And just for example, you know, I had a solid morning Wednesday trading Tesla long. And the reason I was looking long is because for me, the most likely scenario was a 4-hour higher low for us to continue tightening within this range. And so I'm viewing this, you know, you can take off extended hours if you want to make it a little bit more clear. But for me, there's just a very clear wall. I've loved the trading on this name recently because, I mean, look at the day yesterday where there was a very clear play for bears where we had a double top. No, it wasn't yesterday. One of these days in here, there was a double top right at the open. Maybe is that it? I gotta find it. Pause. Okay, it wasn't a double top. It was just a rejection from the resistance zone. So 332.56, 332.99, 331.74. So we got 3 tops in a $1 and change range. And we start the morning on Friday. Big spike up, 5-minute overbought, real extended. As soon as you hit a new low of the day from that big spike up, bears gain a ton of confidence and say, we just rejected hard. If you reject, hold the low of the day, you can give it another go. And that keeps that resistance in play. So that opening range in the first 5 minutes, that low of the day is always very important for me as to whether or not the bulls are able to keep momentum or whether, you know, it's a significant shift. And obviously with the big turnaround, bears just completely took over from that point. And then same thing, just a tightening 15-minute range for the rest of the day. But the levels that I care most about are 314.74 support and then that 332 resistance zone. And again, you know, you got the headlines and the self-driving stuff happening that you got to be keeping an eye on. But we are going to break this coming week, this tightening range. And if it's a bull break, the weekly high or low will be set, and we'll be looking back up in the mid 300s. And if it's a bear break, we're going to be looking back down in the upper 200s. So keep an eye on Tesla. And again, just as a day trader, I know, okay, I haven't been day trading Tesla much while it's in this range because, again, your opportunity on this one day is way more than this 2 weeks or week and a half. And so I trade less when we constrict and I trade more when we expand the range. And I know that I will be day trading Tesla more this coming week than I did this prior week, just based on that chart. Financial sector still chopping around sideways, still possibly a weekly bull flag. Again, bulls are holding sideways. Very little of anything has gone on the last 5 weeks. But another one, look at the 4 hour. It's just tightening up. We're going to break this week. Bounce, higher low, lower high, higher low, tightening up. We're right in the middle of the range. Bulls want to break of 50.88. That's 50 cents away. Bears want a break of 49.82. That is 60 cents away or whatever. So almost right in the middle of that range. And definitely paying attention not to trade it, but this has significant implications on how I view the broader market and the S&P 500 being one of the most important sectors. So definitely paying close attention. I'll trade the financial sector maybe once a month, but definitely paying attention every day. The financial sector was a lead bear this week. Look at all that red. Lead bull for a couple of weeks. Lead bear all week with a big drop. Lower high every day. And now the question is, can the bulls follow through? We had a bear flag confirmed with 0 follow through. And now if this is going to shift in a meaningful way, it's the bulls needing an inverse head and shoulders. So we set the weekly lower high at EMA 12, just like the last time around. And now the bulls must hold 127.35 and break 137.33 if we're going to confirm a weekly uptrend. And again, an inverse head and shoulders is just a trend change from a downtrend to an uptrend. And so that has to happen. We know big picture, the healthcare sector has been a lead bear over the last 6 months. And we're watching to see, does that shift or not? And the burden is definitely on bulls if it's going to. UNH we've been watching as it's been trading sideways. That's still a weekly bear flag. And the bears had a good day Friday to end the week. And so it's a weekly stair step. And we're watching 300 psychological support, but unable to break out. And obviously the healthcare sector pullback is hurting things here. But 316.55, 322.35 adjusted for the dividend. So those are the two levels that I care about as far as key resistance. I have a little exposure in this name, but it was playing the climax bounce. And so, grab some positions, sell some into the bounce, break evens under the low. I don't think about it anymore. It's either going to stop me out, break even, or it's going to be a long-term position. So it can definitely trade within this range for a while. And so just letting it do its thing. But bears definitely liking the week, and they are in control of the short term with a solid win on Friday. Talk about Circle last because it's going to be in depth. CCJ, so uranium. Uranium's been on fire. CCJ has been great. Again, a bearish candle, weekly consolidation. We're keeping an eye out for it. It's shaping up. And again, same thing. I'm going to be looking for a weekly higher low. And bulls, ideally on any pullback, want to hold this double top, just like we did on the daily. This double top at all-time high, we break out, we perfectly back test it, and get another leg up of 10%. And so bulls want to hold a weekly higher low off that level if they're going to remain really strong. But daily chart, still an uptrend, just started some consolidation. There's a gap to fill at 66.80. No red flags. I mean, you get a name like this. I like EMA, what I call EMA runners. I'll talk about that in Circle Day Trading. But we've been riding daily EMA 12 and holding it for almost 2 months. And we haven't even touched it. When's the last time we touched it? Over a month ago. That shows you a significant amount of strength. When I'm watching the 5-minute time frame on a morning and you don't touch the short-term EMAs for hours, it shows you automated buying. And remember, MU showed us that back on June 2nd. Before this, I missed this run and I am taking mental notes. There was automated buying June 2nd and June 3rd. If you zoom in, you can see it. And I guess we'll do that just for learning purposes. But it gives you information. You know, an EMA rider is extremely strong, and if you're not even touching the EMA, I mean, this is the 5-minute EMA, and we went hours without touching it in an afternoon. That's very unusual price action. You'll pull up 1,000 charts, and that won't happen on them. So it's very rare for that to happen, especially with there's no company-specific news. So keep an eye out for that. But we're seeing the same thing with CCJ on the daily chart, just a different time frame. And watching for a test here coming up. We're going to watch for the response to first hourly oversold conditions to see if the bulls remain strong. We had, extended hours. We hit that hourly just missed, but right down towards hourly oversold before continuation. This back burner led to continuation. So again, we know in our strongest moves, the hourly oversold on shorter term timeframes mark the higher lows on longer term timeframes. The other names in the sector, SMR, have already pulled back more significantly. They started giving a little bit of a red flag first. And so again, weekly consolidation likely shaping up. We already hit hourly oversold here into the end of Friday. OKLO is another one. You can see SMR and OKLO are trading very similar. There is space for a daily lower high to be the result of the next bounce. So again, that's how I always view the trends. Okay, we lost the daily uptrend, little check mark for bears. The next big information is, do we confirm a daily downtrend as a result of the next bounce? If so, we know further weekly consolidation is coming. If not, weekly bull flag will be on watch. But these names just showing that it's time for weekly consolidation. And again, because of their breakout the last few months, we're definitely watching for weekly higher lows. Quantum names have been showing it's a mixed bag. The sector has shifted a bit. It used to trade hand in hand, all these names doing exactly the same thing. And now there's rotation going on, and there's some times where there's a clear lead bull and everything else is weaker. So it's a little bit more tricky. You got to stay on top of it a little bit more. QBTS, the weekly consolidation is just fine still, coming off of all-time highs, but a little bit of relative weakness to the NASDAQ over the last couple of weeks. You can see we're really tight here as well. And so the big question here is, if we break 1484, we're then looking down at a gap fill. And my mindset is, okay, there's been a little bit of relative weakness in some of these quantum names. If the NASDAQ breaks daily support convincingly, starts weekly consolidation convincingly, I am watching this sector to short because I'm looking for some monthly lower highs in some of these names, which we'll look at in just a moment. But again, gap fill would be a target here. RGTI, I shorted it on Friday. It did stop me out of my runner, so I ended up break even with that big spike before it rolled over again. A little frustrating, but I was focused on other things. And again, just look at the relative weakness. We've confirmed a daily downtrend. If we break 1071, we get to the lowest level in a while. And look at the monthly. For me, a monthly lower high and continued tightening is the most likely scenario. When you break out and pull back massively, you scout the tightening ranges, and it's a monthly inside bar, and I'm looking for a monthly lower high. And same thing for QUBT. It's been seeing relative strength, so there's a lot of that rotation with this move up. Again, pulling back a little bit on the daily, but key for me is IONQ, the leader of the sector. Fundamentally, it's a really nice daily equilibrium. So any bear plays in the sector, if they're going to follow through, they would need this equilibrium to break bear to help. So I'm keeping a close eye on this as well. Anything under 4405 is a lower high. Again, this is, I'm not bearish quantum names. I am noticing a little weakness in some of them, and it's a if-then statement. If the broader market does this, then I look bearish quantum. If the broader market breaks bull and heads up to a new all-time high, quantum's likely going to stay just fine and not be a good bear trade. So again, you get a lot of people, newer people, that want me to predict what's going to happen. Are we going to drop in quantum? I don't know. I have to react. I'm a reactive trader, not a predictive trader. I'm going to react to the broader market. If the broader market's up 1% on Monday, I'm not looking short quantum. If it's down 1% on Monday, I'm looking short quantum. It's that simple, but again, it's very hard for newer traders to get that mindset in their head. They think they need to be predicting, what's going to happen a week from now, and that does yourself a disservice because you're then ruling out 4 of the next days of information. Every single day, every single hour, we're getting new information that shifts probabilities, and we have to be constantly reacting to it. Dollar. So dollar broke bear on the weekly. It's a clear downtrend, but no bear follow through at the moment. Daily, zooming in, little inverse head and shoulders attempt. So if the dollar bulls are able to confirm a daily uptrend, by breaking 99.16, the weekly bounce will be underway, and we'll then zoom out and look for anything under 101.98 as a weekly lower high, but a potential short-term shift underway. So keeping an eye on that. We have gold overall still trading fairly sideways, pulling back, trying for a daily higher low. It's a daily uptrend. The periods of daily consolidation have lasted many days, but keeping an eye out for the possibility where if the dollar bounces, gold could be back. Again, EMA rider, EMA 12 on the weekly, could come back and test that a little bit, a couple percent to the downside. Silver's giving a little bit of red flag as well, just in the pullback. Even if we bounce here on silver, we have to be cautious of a daily head and shoulders shaping up. So silver dropped down to a double bottom at 35.45. 4 hours, still a downtrend. And again, just watching, are we going to see weekly consolidation? And if we do, bulls really want to hold the back test of previous resistance as support in the mid 34s. The miners are even weaker, specifically the junior miners, GDXJ. I stopped out of my runner position. I was long, I forget when exactly, it's been weeks at this point. Take some profit, leave a runner, and breaking the support, exited that runner of JNUG. And you can see compared to this GDX, it's holding on way better. Similar, but still way above daily support. So bulls here are hoping that they can hold support and tighten up. But relative weakness in the miners compared to the metals this past week. And for me, it's just sizing down, locking in some profit, and knowing that I don't want to hold all of my positions through weekly consolidation. I'll hold some of them, and I'll hold silver through some weekly consolidation because I've done that many times with part of this position over the last 6+ months. But oil's battling and struggling at the highs here. That's now the second rejection from the initial top. So we top out, we reject again. So very clear resistance zone in the 70. It's a 70. Well, it depends if you're adjusted or not. Again, I like when they're nice and close to each other. But anyways, we've got, if the bears are going to follow through in any meaningful way, it's a daily stair step. So it's a higher low every day for weeks. And if it's going to be a hard rejection from resistance, we need a bear break of 72.32, and then we'll watch for a daily higher low. So clear resistance zone, but bears unable to reject in a meaningful way. And natural gas has seen some benefit from the war headlines. And looking at the weekly, still tightening up. So I'm looking at this resistance, which rejected the price. We're building a base down in the 340s and still sideways. So not much going on. The bulls are battling for a monthly higher low, but they can't officially set it unless this sideways range breaks bull. All right, so circle. This is I love this kind of play. Blue sky breakout. This just encompasses all of my edges as a trader and all of my experience because, again, if you look at the vast majority of my gains in my career, they are condensed in short periods of time in euphoria blue sky breakout markets, and the playbook remains the same. And the playbook is back burners, these bounces. And again, Google chart guys, back burners. If you don't know what that is, it's my most profitable trading strategy in the last decade of trading, and used it on CRCL on Friday to have some nice trading. So what you will generally see, and again, I've taken this trade style 30 to 50 times plus in my life with Tesla blue sky breakout, Canadian cannabis. That was a solidifying moment for me because it led to huge gains and it just kept working. When you're in blue sky breakout, you close at the high of the day, right near it. You get the extended hours. The bulls keep pushing it up in a low liquidity environment. They give you the gap up the next day. You look for profit taking on the gap up. You look for 5-minute oversold to play the bounce. And if you're going to see continuation, 5-minute oversold marks the low of the day. And that worked out perfectly on Friday to a T. And, we started the week strong. With how we closed last Friday, I probably talked about it in last week's video. We're probably heading to all-time highs. I wished that I had that position Friday afternoon. I wasn't watching it. But, okay, blue sky breakout to start the week. Still keeping the relative strength. I'm very interested. The party got started on Wednesday in a big way. And coin was benefiting as well. A lot of headlines. The Genius Act, the stuff in Congress and the Senate going on is beneficial for this name. And again, I shorted this. I actually had a really good short. I generally won't short a blue sky breakout. The only time I will is when I have high conviction that we're looking at a gap up into profit taking scenario. And I'll look for the short on that morning. And I did it with MSTR way back when. I shorted it that day just because, okay, we're massively extended. I know that we're going to end this move up with a gap up open. And so I shorted it that day. So I'm very picky, and most traders shouldn't short blue sky names, but you get enough experience, you try it under very certain clear circumstances. And so anyways, I had a really good entry pre-market, and I posted these. I don't have the orders handy, but it was a volume climax. Look at the volume here. And it was just running away, straight up. And I'm just looking for 5-minute consolidation. I'm just looking for 1-minute consolidation. And so I see a volume climax shaping up. I got a great fill short in the 237s, 237.45, 35 cents from the high there. And as soon as we pull back, I take a little profit. And I'm going to stop out if 238 breaks, because my thesis is that's a high for now, or I'm wrong. And again, I'm not going to scale into a short and then just hope it pulls back. I have to be in full control the entire time. And fortunately, the timing was right here. Take some profit pre-market. All right, let it play out into the open, because I think we're going to gap up into profit taking. My target is 5-minute oversold. We dump down. I exit the remaining of the short a little bit early, because I know I want to start planning for the long. I want to play that 5-minute oversold back burner. And it did take a little while to form. We hit 5-minute oversold. If we pull up our back burner indicator, hit 5-minute oversold. It did take another 10 minutes or so before it was the bottom. Fortunately, it wasn't another big leg down. It was more of a grind, more of a falling wedge type of pattern. And I almost stopped out right at that low because I was positioning for this bounce. And I did stop out right at that low. And then fortunately, it was a break-even stop. And so I had my finger on the trigger to get back in. And so as soon as that big green candle hit, market buy right back in. And then it's off to the races. And that's exactly what we want to see. And so if you look on Twitter, I posted, the pre-market game plan, laying this out. You look for the gap up. You look for the profit taking on the gap up. You look for 5-minute oversold conditions. You look for the bounce. So 12% bounce. We then tightened up, bull break, new all-time high. And again, I've got my runner position from those lows. I take the majority of my profit. I sell 2/3 of the bounce. My break-even's under the low of the day. All right, if this move's going to keep going, if we're going to hit 300 next week, crazier things have happened. I will leave this position and see if the bulls can win the day. And they did. I didn't swing it. But what I will then do is find the EMA riders and trade them. Sometimes I'm buying off 1-minute EMA 12 and I'm adding to my position. So let's just say, let's use easy numbers. I got 100 shares as my runner position. I'll buy another 100 on, or sometimes, okay, we'll keep it comparable. Yeah, I'll buy another 100. And if I'm buying off 1-minute EMA 12, so I look and say, okay, we held it. If we're going to keep running, we're going to keep holding it. All right, we pull back here. We come right to 1-minute support. We come to EMA 12. We hold it. All right, let's say I'm in 244.25. We then get a new high. I'm out half, 246. My break even is now under that low. I place a stop under that level for my aggressive added remaining half position. I can't lose on it. And now I've got more position. And if it keeps running, I'm going to benefit more. And if it rolls over, I'll stop out my aggressive add, and I won't lose anything, and I'll still have my runner position from way further down. And so I was just doing that all day. And I stopped out a handful of times, break even, stop out 2 or 3 times. But, I played this bounce. The break at 230 psychological had me interested. 2-minute oversold, looking for the 15-minute higher low. And so we set that 15-minute higher low, then traded sideways. So again, my edge as a trader is the back burners. I love the volatility. I love when it's blue sky breakout and things get nutty. I do size down my positions. I compared to my standard Tesla position, my circle positions are maybe 40%, 30 to 40% of a standard Tesla position. But, we're moving 15% plus. So very worthwhile. And again, I'm not in aggressive mode. I'm in conservative mode as a trader. When I was in aggressive mode doing the same trading style, I would be all in Canadian cannabis on the close at the high of the day. I sell on the gap up, and then I reload a fat position in 5-minute oversold. And when you're in aggressive mode, conservative mode, I got a 3-day maker Thursday and a 3-day maker Friday. That's great. I'm very pleased with that. But if you want a 3-week maker, what you have to do is expose yourself to a significant drawdown. How does that work? Well, when I was trading crypto 2017 and leveling up, my initial goal is, all right, I'm taking this $30,000 and I want to make $30,000, get a down payment for a house. And next thing you know, 6 weeks later, I'm up 1,000%. And it's way more than I ever thought it would be. And so I keep the pedal to the metal, and I know that I'm going to keep doing what has been working, and there's going to come a time when it stops working. And when that happens, I will see a significant drawdown from my all-time high at that point. But if my goal is to make $30,000 and I'm up $500,000 and I pull back $50,000, if you tell me back here, hey, you're gonna pull back $50,000 from the top, I'd say, what a disaster. What went wrong? No, you just allow for that drawdown to ideally make, if I know 50,000 drawdown can happen, but I can get potentially 200,000 more dollars before that happens, it continues to be worthwhile. And so it's the same mindset on a shorter term time frame or smaller numbers, whatever is relevant to you. It's easy to do once you have the profit cushion, obviously. But once you get that profit cushion, it's a longer leash. You just keep doing what's working until it stops. And then when it stops, it's going to sting a little bit. And, you're going to have to deal with I could have had $100,000 and now I've only got $80,000. It's all about how you deal with that psychologically. But again, that's not how I'm trading. I'm sizing down. If I was being aggressive, I'd be easily in 5 times the position sizes. And that's just not where I'm at. I'd rather be very comfortable. The risk of the drawdown for me is not worth it at this point. But for people trying to level up, you've got to expose yourself in order to do that. I'm not going to see huge gains because of my trading style right now. And, the people that show you I'm up 300% on the year, you say, okay, yeah, that's great. Congratulations. But you also know that they will see a significant drawdown if they keep trading in that style. Do good things. I hope you're fantastic. I got no baby ducks this year, no baby geese, and there were no baby turkeys, and I was so bummed. And today, that changes in a big way. Dual mamas. I assume that's 2 batches of babes. Solid crew. They're totally in love.